Cameron Brandt is with us, Director of Research at EPFR Global. Cameron, good to have you with us here back on the program. Prashant this side. The big talking point has been foreigners continuing to sell India. And we've heard that it's because they're selling emerging markets. So India is part of it, so we get sold as well. Is that the main kind of flow action that you've been seeing since you track this data on a week-on-week basis closely?
As a matter of fact, especially for India, I've been seeing the opposite. Dedicated India equity funds have proved extremely resilient. And while investors seem to be reluctant to take on too much broad exposure to all emerging markets through the GEM funds, they aren't fleeing either. So certainly in the mutual fund ETF space, there's still a lot of appetite for emerging Asia in general and India in particular.
Okay, all right. So you in a way, Cameron, what you're saying is dedicated India funds are seeing inflows, but little appetite for broader GEM funds, right? That's what you're saying.
That's absolutely what we're seeing.
Okay, but at a net level, that still means that the number here, which comes as a negative on a daily basis, Cameron, when will that turn, according to you?
No, because the sort of redemptions from GEM funds are frankly not big enough to offset the money we're seeing going into dedicated India funds, which actually set a new weekly record last week. The election result from a mutual fund investor perspective has actually been very well received. I think there was genuine worry that if Modi got a supermajority, the sort of longer-term investment outlook would have been worse than the sort of more restrained mandate that he did come away with.
That's a first, because a lot of people were hoping for supermajority for the policy to continue, and you're saying that a supermajority would perhaps be long-term worse. That's interesting, but a lot of people are also looking at China now as a value bet. Where do you stand on that debate?
Yeah, I'm not surprised it's happening, but I think China is pursuing some very clear policies that put what you would regard as investor interests very, very far down the food chain. So, yes, China may be a little oversold, but I haven't really seen anything there that fundamentally changes the story one way or other. Certainly, there have been some well-received rhetorical flourishes, and hopes are riding high again that there'll be more proactive measures to ameliorate the property market issues. But I really haven't seen anything that makes me think the needle is really shifting, and I'm not seeing that in the flows or the allocations either.
Okay, all right. Final question, Cameron, before we let you go. What about gold? At one point of time, there was some incremental flows towards gold, but gold's come off a little bit. What's your reading of it?
So I agree. After a brief sort of flurry of positive flows to gold funds, they've reverted to mostly negative. Certainly from sort of a U.S. perspective, I think part of it is that we're starting to see some retail involvement again in the fund flows after a fairly lengthy absence. And that means more money for cryptocurrency and less for sort of stodgy classic asset classes like gold.
Okay, all right, Cameron, we'll leave it there. Thank you very much for joining us and appreciate your insights into fund flows and the direction of it. As always, dedicated India funds remain extremely resilient.